Hey everyone, welcome back into another episode. Today I'm going to dive into something that is a bit more deep, and that is talking about a CBDC and whether or not we're getting a CBDC that's coming in as a stable coin. Today I'll break it all down for you guys and get into it. I think the biggest issue that we face around privacy is how we're going to be able to navigate not only the market and what actual assets are going to be an opportunity for the future. Of course, that will get into XRP, gold, Stellar, all of these things that pay attention. Don't miss the full episode. Let's just get right into it. I want to thank our sponsor today, and that is Uphold, where you guys can earn crypto better. A lot of things happening with Uphold staking rewards, so you can stake up to 20 different cryptocurrencies and get into the reward side of things. New tokens, early access, along with full transparency. This is one of the best platforms out there to make trades on when it comes to crypto. The other thing you guys should be doing is this right here. Get the card, the XRP rewards card, which comes in the form of an Uphold debit card. And the nice thing about this, guys, is you can do this without a credit check. Also get up to 6% back on all your purchases for the first 3 months. You can get up to 10% back with a direct deposit stacked in on this. So this is one of the best values out there when it comes to a debit card where you can get into your digital assets. Make sure and check out Uphold. Use the link down below. Let them know we sent you. All right, so just jumping into what's happening in DC, as you guys know, there is a massive move right now between not only the Senate Ag Committee, which is submitting their bill, possibly going to be voting on that here by the time this publishes this week on Thursday, and of course the Clarity Act, which got a huge pushback from not only the industry, but the real question is whether or not the money managers are going to be able, meaning the banks, are going to be able to adjust their proposals on these 130 plus amendments going forward. And here's what it comes down to. I've had a chance to read both these bills from front to back. Then I've run them through AI and looked at all the potential pitfalls. What it boils down to, guys, is we are transitioning into what is programmable money. And what I mean by that, if you don't understand, many people would say, all right, well, wait, Paul, there's a stipulation right now from President Trump that says no CBDC by the Fed. Here's the thing. I think the massive distinction right now, when you think about digital money, it is just right now an entry in a ledger, right? And it's one of the most, I think, biggest opportunities for government to start to look at a financial reset. And under a central bank digital currency, that would be a very easy thing to do. But the other option is a highly regulated private stablecoin. This is where it gets very interesting because it's not an if, it's a when. And I think that is the issue that we are facing. The more that I'm reading into not only the people that are setting up these laws right now in DC, but the more I'm getting into understanding what's going on around the stipulation for stablecoins. And this is a thing that concerns me the most. It does get into a situation that I think starts to push the United States into a position where we could see the global reserve actually be lost by the American dollar. Now, what would make you go into that? I want to share a few screenshots and get you guys kind of on the same page, because one of the things that you have to understand is we have seen silver absolutely just skyrocketing up the chart. You can kind of see there's the chart right now, reversed a little bit. If you go in and actually look at the silver chart, let me bring that up for you real quick. One thing is I think this again is just a little bit more of the manipulation that's taking place. But if you look at silver, let me share this for you. This, of course, is the current silver chart in general. When you go to SLV, you'll see pretty much the same thing. We're still hovering around 97. Actual silver, the raw material. Notice this wick up here to 117 in that reversal. That's what they were talking about in the Kobeisi statement that they put out, is it wiped out a lot of those immediate gains. This is money that is starting to manipulate into the silver market. This is one of the big concerns. Now, gold, of course, has been holding. If you look at where gold is right now, as I record, getting ready to hit 5,100. This, of course, is all an indicator of where we are going. And I think that is where we are getting into a controlled money grid. And this is the issue that I think a lot of people do not realize. There's a lot happening right now when it comes to not only these bills that are going through DC, but it's the understanding of how this is actually being transplanted from what was a reserve global system under the dollar into possibly a system that is now going to be operated through stablecoins, gold, and a supply, I think, of certain assets, XRP being one of those, Stellar being another one that will be a big deal. If you look at something that's happening right now, and this is a very significant tell, I believe, just look at this right here. Gold, now you're talking about another $4 billion. Tether bought 27 tons in gold. Now, step back and let that sink in for a second, because when you look at gold of that amount, we are talking about them, being Tether, buying more than any central bank in Q3 of last year. And when you look at the official data, it's going to be close to that in Q4, and we're still waiting on the final data. Most likely, they'll be the top three. So they're buying as much as central banks are. Who's the central bank now? Is Tether that closely relied? Now, remember, Tether essentially is a programmable stablecoin right now. We've already seen the ability for freezing transactions within Tether, so it is not out of the realm of where this is going. And there are issues that we are faced with right now around a lot of this that is starting to impede, I think, on where we are going. If you look at the Clarity Act and private stablecoins, on the surface, it's kind of marketed as a consumer protection side, and market stability. But once you start looking a little bit closer, they force private stablecoins to adhere to federal backing and surveillance mandates. This most likely is going to get through in some format or another. And this mainly puts the government into where they're doing what they've done before, which is turning private companies into deputies of the Federal Reserve. That's right. You're getting private companies that will be slotted into basically adhering to a lot of these regulations. Remember, clarity is being offered to the regulators, not the users. This is ensuring that basically no digital asset can function as a dark or truly private alternative to the dollar. This is what it is really boiling down to, is control. I think the industry thought we were getting real openness and understanding of where the blockchain industry was going. Reality is they are trying to utilize this as a stepping stone for more control. And I think getting into basically a digital door that leads to the back to the same central oversight that we've already seen around the American dollar. This is the problem that we are now faced with, guys, and it is not going away. DeFi, of course, is the one that I'm watching very closely, because it will be the area. I'll just show you what the DeFi Education Fund is doing. And of course, this right here is Boozman, who is the guy that is architecting the Senate Ag Bill. Even though it does give a little bit more protection for DeFi, which I think is going to be the biggest loophole that might still be available, the key here is if we continue to see the stable coins become basically a transactional method to control population, which I think is where we're going. Now, could this happen in 2 years, 3 years, 5 years? I think that's all within the realm of this decade, meaning before 2030, of where this is going. Remember, the math is already broken. We already know this. This is a big issue because the math is not adding up. And when you compare that U.S. national debt right now, it's a runaway train. We're missing trillions in, federal balances and how to be. I mean, most places in terms of the federal government won't even allow audits going in. So fiscal management is literally a problem. It can't be fixed with a tax hike. There's no way. I think that Trump and this administration, including Scott Bessent, realize now that they are really forced to get into a new exit strategy, which I think is the control grid. And if you look at that, there's a couple of people who have talked about this before. If you can control the currency and you can program the population spending habits, then you basically can manage the debt collapse without a revolution. That's the key. Manage the debt collapse. So that way they're not, losing everything and all in one. And I know that's crazy to say, but the point being is that we are in a statement right now for society that I think we will look back on in a decade and realize this was when freedoms were given up the most. So be on the lookout for this, because I think the key here is what I call the sovereignty stack. And if you look at this, how do you exit? These are the things I'm looking at. I'm looking at XRP. I'm looking at XLM, Stellar. I'm looking at gold, and I'm looking at Monero. Now you would say, well, wait a minute, Paul. Monero has been up and down. It's erratic. But for the most part, when you kind of compare what has been going on, let me see if I can pull up Monero real quick for you. And the point I'm getting at, it's not that, hey, am I concerned about? This is where Monero was essentially not too long ago. We're talking about August of 24, trading really around that 176 range. Started breaking out here in April of 25. That's when we really started seeing the growth of it. And if you kind of compare something right here, I want to show you the growth on Monero in general. We'll go to this April 25 section to where we are. It had climbed up about almost 200%, retraced back down. This is a weekly chart, retraced back down to around 400. I think 400 is probably going to be somewhere in the happy middle. In between 3 and 400 is going to be the happy middle for Monero. And the key here is, does it continue to be a weapon, and when I say weapon, of sovereignty choice for the future? Because as we start to see more sophisticated investors taking a look at the tokens that are going to have exit velocity out of this system, in many cases, it's going to be gold. Tokenized goes, whether you go with Paxos or XAUT, Tether Gold, or if you're doing self-custody and doing something like physical gold, all of that's fine. But I think right now, you've got to look at XRP, Monero, and XLM. These are the ones, and they are basically the role for when, and I think the inevitable time of when we see this switch start to occur. One other thing I want you to kind of consider here when you think about, the survival kit you're going to need for the near future. If you look at physical gold, that's kind of an ultimate off switch. No counterparty risk. The key here, it doesn't leave a digital footprint. Key here, of course, is whether or not we continue to see pressure on physical gold and whether or not physical gold becomes a backstop to whether it is stablecoins or possibly to the U.S. debt at some point. So treasuries. Monero, I still think that's going to be the invisibility cloak that you're going to want if you're trying to keep transparency close. And it obviously provides privacy by default, but it's kind of the equivalent of a cash transaction if you think about it. I think the bridge is going to be XRP. This is going to be everything from moving in and out. You're going to have the capacity, I think, to where we're going to see larger transactions, obviously within bank to bank, but I think XRP is going to be one of the tokens that is held for value proposition because of its ability to operate within the controlled system going forward. And then, of course, I think the People's Rail, as they call it, is Stellar. This is really built for microtransactions. So this might end up being a payment model that we'll see for, it's always kind of been around the unbanked, but I think this is going to translate into the sovereignty stack for how people are going to be able to use Stellar in the future. And there is so many things right now that is having to be debunked around all of these bills that are coming through. I'll show you some stuff right here just to give you an example of this. This, of course, is the education or the DeFi Education Fund. And they had to put out a document that they published called Myths versus Fact when it comes to what we've been seeing around the Bank Secrecy Act. And of course, the Bank Secrecy Act is where they've been. Let me kind of zoom in on that for you guys. So Bank Secrecy Act, as you guys know, this has been in guidance for quite some time. And the point behind this that I want to get into is that it is one of those situations where people are utilizing the BRCA and also how we're setting up or how they are trying to set up this regulation to basically say, hey, it's going to continue to be a money laundering black hole. AML is going to be a problem when in reality, it already aligns with what is going on with the BRCA. So this would be a big deal if the Senate Ag bill goes through. Now, I think the Senate Ag bill is going to make its way in. It's probably going to get passed or it's going to make the markup stage on Thursday is what I'm predicting. And then it's just a matter of automatically, I think you're going to see clarity come through at that point because it is a tandem bill. The key here will be how much is given up. And it really boils down to, are they pleasing Brian Armstrong with Coinbase? If they are, don't expect, I don't think Coinbase is a friend. I think they're a frenemy in the sense of they are out for themselves. They're looking at trying to take on these big banks. Is there going to be some opportunity for them to create a, more of a mass population do-good opportunity? I don't think so. I think we are at a point right now where DeFi is the last bastion of reality where all of this is going. And If you look further into this, I mean, just to give you an example, Clarity Act undermines the illicit finance and AML rules elsewhere in the bill. BRCA does not weaken illicit finance provisions. Instead, it reinforces them by clearly defining the regulatory issue. Then you have, of course, this myth that this weakens the ability to prosecute crimes under Section 18, which is the big federal code. This, of course, is not necessarily the case, does not deprive prosecutors of meaningful enforcement tools. You got this one right here where we're dealing with it creates sweeping exemption for all software developers. This is the big deal because the statutory language is narrowly tailored to only those actors who do not control user assets, defined as non-controlling developer or provider. This gets back into the whole issue around protecting developers that are creating this technology. I know there has been technology that has been regulated and policed before, especially in cryptography. I think that may be where we're going here. So it is going to get a little dicey, I think, here in the US of where this is going. Does this mean that we're going to continue to see a lot of control? I feel like yes. I think once this goes through, it'll take some time for this to occur. But at some point, we are going to see more control. It's very possible we are in the first stages of programmable money. The only thing, as I said, that I think keeps you away from that is going to be gold, XRP. I think obviously Stellar is going to be a big play on this, and then Monero if you're on a privacy side. Solana, I'm still hopeful for, and of course, ETH will continue to be a big part of this because of its global presence. And I also think that Vitalik may end up being an unsung hero here, especially for DeFi. And I'm going to put out a video on that because it's going to break down a lot in the way of where ETH could be going, which is quite a bit different than what we're seeing right now in terms of the overall expectation from our government and how that's going to look. So I want you to kind of just prepare. I think you're going to have to get a little bit more local in the future. I think you're also going to need to learn the tech. If you're not in DeFi right now, you need to understand DeFi will be one of the elements that might get outside of a programmable money system when, in fact, I think we're on our track to get one. My anticipation is they are going to pass this Clarity Act with a lot of the stipulations intact. I fear that stablecoin yields will be lost and the banks will win that battle. They're going to do something to appease Coinbase. I'm not sure what's being said or done right now, but the likelihood is it is going to happen. The other thing that you've got to consider right now, if you think about the government's DeFi strategy, remember, this is the regulator wrapper. It's not right now, at least, it isn't trying to ban DeFi, but they are trying to re-intermediate it. This will be the question, if they can get to a permission DeFi pivot. So if this is something that does happen, we could see a lot of these organizations be willing to do KYC to operate in the United States. So it's going to get a little dicey, I think, for individuals who are utilizing DeFi, whether you're using, different kinds of platforms out there. But the key is that this is going to be a situation where I think the code is going to become the target again. So it's not looking good in terms of how we've known crypto in the past. I think now we are going to see more around not only the control of programmable money, but I think the DeFi strategy has got to move away from convenience and you've got to go towards resilience. So think about that. A lot of this has been built on convenience, easy, making it too easy in some cases. I do think you're going to have to get into non-custodial yield, whether that's keeping your XRP or XLM on an exchange, get away from that, get into where you're yielding out on things like, there's tons of them out there. We've had several of them out here on the show. But if you look at what Axelar is doing, obviously a Hugo is doing some amazing things as well with Flare. And I think the key here is that we're going to continue to see that. Then you look at the DEXs for Stellar. These are going to be some opportunities, I think, for sure. The other thing that I'm concerned around is we may see an RWA decoupling. And this could be a big trend for 2026, especially around tokenizing physical gold and silver into DeFi. So be on the lookout for that because I think we're going to see some places go there. Whether the strategy would be built around, doing things like giving or making the ability to borrow against a tokenized vaulted gold, which I think is coming. You'll see more of those kind of services without selling the assets. That's going to be a big deal. But I think you're going to have gold-backed tokens as well. That will be very interesting, because if we get into bearer tokens, that would be that because that's a situation where they can't be transferred just to any wallet, and they could only not just approved wallets, because remember, you're going to have approved wallets coming down the pipeline. I think we are going to have programmable money at this point. It is not far away. Now, everybody is saying and is looking at, this doesn't sound like it's coming that fast. I think that's the whole point. I think this is the boiling the frog moment, is slow and easy as they start to understand. I don't think a reset is going to happen overnight. I think this is going to be something that will take some time. So there's a lot of privacy preserving compliance you guys can get into, because you're going to see government pushing for total transparency. They'll use DeFi protocols that utilize, ZK snarks and ZK proofs. Expect that. I think right now, as you interact with confidential DeFi layers, whether you're doing, variations of this, these will allow you to provide or prove you have the funds, because it's all going to boil down to the idea of where funds are going. Remember, this is all in the guise of AML, KYC, sanctions, etc. for other countries. They're worried about that, when in reality, I think it's worried about what the American people is going to be looking at, because control the money, you control the population. You guys understand what I'm getting at. Let's compare this. If you think about DeFi versus what would be programmable money. All right. If we end up with a programmable money, then you essentially become kind of the solution for it, you as an individual. You're going to have, if that is the case, there'll be mandatory KYC on every swap. So everything you're doing, mandatory KYC. If they get into liquidity issues, there'll be centralized and permitted stablecoins, you watch, and there'll be whitelisted wallets. This is the other area that I'm concerned with. So I think self-custody is going to be a bigger and bigger element coming into this. So be thinking about it. If you guys, by the way, if you're not using the Tangent wallet, that is the best self-custody wallet out there going. So make sure and check it out. Let me bring up Tangent on screen and I'll just show you, because they are getting Tangent Pay coming in. I know that's, kind of going into the system, but they are getting a Tangent Pay product, which is the product where there's going to be a debit card that's attached to your hardware wallet. And you could set it up, to where you have one wallet just specifically for Tangent Pay, transfer into that. There's ways around this that you can kind of look at. But I would look at Tangent as being the one to watch. Here is their website. If you guys, I think you've probably seen me and heard me talk about this quite a bit, but it is by far the best one out there for self-custody. And there's a lot to it in terms of not only security, but easy to set up, so you can get other people kind of brought into it fairly quickly. Smart private key backups. This is probably the killer app behind it, which I think is cool, because the chip generates this is a non-extractable private key on the device. So that in itself is huge in the way it works. This is by far one of the best out there. And of course, it can all be tied into, traditional biometric security, all that. And again, tied into DeFi, into your DeFi wallet. So something to check out. Use a link. That helps us. One other point I want to hit on, because as you guys know, there is a lot happening around what's going on with not only just Tether buying all this gold, but now people claiming that we could see, I think it was Tucker Carlson that was saying that we could see Bitcoin become a global reserve. I don't think it's going to be Bitcoin. I mean, now, does Bitcoin become part of the rotation of assets that might be in the mix? Be on the lookout for that. I think we're going to end up seeing stablecoins and or something else come to the front of the line. So be on the lookout for other scenarios. Don't forget, World Liberty Finance will have a big role in this. We all know who that is. Other things to kind of keep an eye on. We'll get you guys an update on the vote this Thursday on the markup. That will be significant. And of course, the things that we will be realizing in the next few, possibly couple of months, of what the Clarity Act is going to strip away from the crypto market. I think we're going to see an exhaust phase here that will hit the industry for sure. And of course, just like and subscribe. I'll catch you next time right here on the XRP Pod. Take care.